Yo, what's good, everyone? It's your favorite mentor, your one and only Forex Hero. I'm back again today with another banger, and you'll be able to understand the tricks of understanding the candlestick formation. So, before wasting much time, you know what to do. Click the subscribe, click the like, click the notification bell so that you get notified every time I drop. And also, I'd like to thank you guys for also pushing this channel and also sharing it with your friends and families. And I see growth in this channel. You guys are part of the family. This channel is basically made for you to enjoy, and for those who like to learn and trade. And also, you know what to do. If you like to use the broker that I'm using, click the link below. Click the link below and sign up for an account. It's one of the most trusted broker, and they have satellite offices all over the world. Without wasting much time, let's go into the charts and give you guys some few tips and tricks so that you can be a profitable trader. Let's go. Yes, guys, I'm on the charts now, and I'll be giving you guys much clarity with the tricks of the candlestick patterns, how I managed to use this trick to be able to be a profitable trader. So let's look at what is currently happening. We have a move that is currently happening with the mindset of knowing that every candlestick formation, whenever you go to lower time frames, it is shows as multiple candles. So I want to show you guys something that is very much informative and how you can be able to adjust it to suit your trading recommendation. You see, now I'm on daily, and I can see that we are having this candlestick formation, this one. And in most instances, you get to see a point whereby the market tends to do something like this. So let me draw my candlestick formation, and then if it's something like this, and then your week, just draw one single week. So with that being said, you need to understand where you are having that movement. Okay, this will be my week. Okay, doesn't want to go into the center. Okay, fine, let's use the current one. You are having this type of scenario. Having this type of scenario, you can see by you looking at this, it is a rejection candle, it is a reverse hammer. And then if you take this point, can you see that between all this there's a movement that happened? Okay, let's go to 4 hour. Can you see all this move? You would have missed it. So that's why we use a higher time frame to lower time frame type of analysis, so that you can be able to see what happened in a bigger structure, and also what made it develop into that big structure. Because you can see here, if you only use this low and the high, you would have missed this peak. But if you are using this method, you would have caught it at the break and as well at the risk entry. So let's dive deeper and see what we can oppose of this. I want to show you how would you know this will reverse, and also looking for another point. Yes, I want to show you something. Okay, found it. I want to show you this point here. Can you see here we are having a doji? This is a doji. Let me put it here. Doji candle. As we know that a doji is some sort of a indecision, but also it's giving you a movement and understanding that the price has chances of reversing because there is an indecision here. But we do know that it reached its high, and also this week it's longer on at the top and then a little bit lower here. So with this one, I want to show you what you would see on 1 hour time frame. Let's go to 1 hour. So if we take it here, let's go back to 4 hour and see. Okay, let's use this. Perfect. Go back. Do you see this is the low, but can you see that this, all of this is what is a doji, meaning it's showing you that price has closed around here. So it's been pushing up, further up here, it reached its highest high here, and then it pushed to the low here. This was before this break. So how would you know that, okay, I'm seeing a doji? That's why I always say the candlestick formations give us stronger confirmation that happen on 4 hour. So we can then apply that information we get into lower time frame. We have a doji in all of this. Okay, so now I know that we have a doji. Then I dive inside. I see we have a what? A reverse hammer. Hammer, which is showing us that price moved to its lower side and it was rejected. You can see. So if you were to take this trade, your stop loss has to be above this high. Stop loss area. So this trick also assists you in order to place your stop losses as well. So you would know that, okay, you're taking an entry and your stop loss has to be above there. Then you take it all the way, and say 90%. So you can see this candlestick pattern also assists us in identifying where your stop loss is. You understand? It should be higher than the previous high. So this one gave us a risk and it's a hammer. But looking at all of this, what do we have? A doji on 4 hour. So you look at it and you'll be having multiple candlestick formations. You must know how to apply them. And before this, you can see, look, it's going all throughout here. You can see. So it didn't cross this one, and you can see this one was a bearish engulfing. It's engulfing all this 1 2 3 1 2 3 bullish candles. Look at this one. Look at this one. It's a bearish engulfing candle. Bearish engulfing. So this candle was simply telling us that the market now it's ready to push stronger to the downside, because we have what? 1 2 3, which is the 3 candles pushing to the upside in a form of a correction, because we are coming from the top sell. This is a sell from the top, correction, impulse. So What do we know? We know that we have impulse, correction, impulse. So this is just a simple way of analyzing, but you can see that on this one, what we have a bearish engulfing, confirming the further strong push to the downside. So this candlestick formations are very much strong when they happen closer to your support at the high or at the third touch, and also at the low or resistance, and also the bottom of the structure, which will be giving you third touch. You must always know that. Want to look for something that can give you guys a little bit of a nature information, and also for you to be able to say, okay, this is the type of candlestick. You must wait for it to close, because sometimes you can look at it having a move, and then what happens, it decides to close in a different manner. So don't just rush, wait for the close. You can never be late in the market. There's always opportunities. That's why I say trading opportunities are like trains. You miss this one, there's another one coming. Look at this one. You can see this bearish engulfing candle. This one, bearish engulfing. Look how it, this one, yes. But how would you know? Okay, I see it's a bearish engulfing, but how would I know? Okay, fine, I see an M formation. I see here a double top. See, double top. Remember, a double top, and what do I see? It's a correction. I see correction in the form of a rising wedge. So I know that we should be doing what? Let's see here. So we should take this now. So you can see it's a double top, and then your rising wedge should know that you are having a rising wedge at this point. So we know that what will happen, this will eventually drop. Bearish engulfing. So once you saw that this has closed, you have no other reason not to sell, and put your stop loss just above what? The previous high, like I've explained. So I'm glad this was informative, and also guys, please do not forget to share with your friends and families, and make sure you catch me in the next video. Your favorite mentor, your one and only Forex hero. Peace.